Hello and welcome to the Weekend Investing Daily Byte of 28th of August, and the market made another new high at 25,100 today. Although once again every rise is followed by sort of a dump by investors in the second half of the day. So while we are gradually and incrementally moving up, but there is no sentiment of runaway sort of moves. It is like gradual. I mean, net we are moving up, yet there is no sort of bullish enthusiasm as such that is visible, that markets are really flying off. That is not happening. Uh, so we'll discuss a important subject today. क्या म्यूचुअल फंड सही है? You've been hearing this for a long period of time, and believe me, I'm not going to trash any segment of the market just because it doesn't suit me, but we'll take some objective view at how some of this is working for some people and some of it may not be working for others. So, क्या mutual fund सही है is the discussion of the day in the second half of the video. To go further, before we go further, please do subscribe the channel and click on the bell notification. You'll get the update on the new videos that we are uploading. And we're doing a video almost on a daily basis. The weekends, we do some special videos. Uh, so there's a lot of work that is going behind the scenes, and of course, it is to some extent also engaging, and knowledge enhancement is happening for the team and for me also while we prepare this. So where is the market headed? The market is gradually inching up. We are again at 25 at the end of the day. We hit 25129 during the day. Uh, we've recovered all the lost ground from August 1st, from where in the 3 days we lost almost 1500 odd points or 1400 points on the back of yen carry trade scare. In the last 27 days, 26 days, that scare has gone away. So we've had two scary moves since June. First was the election outcome, where people just threw away their positions, saying that coalition government, sort of coalition government, has come in and the government will not be able to function, and that there will be unreasonable demands from Mr. Nitish Kumar and Mr. Naidu. Somehow that narrative has just vanished. Then there came the yen carry trade scare, that all yen carry trades will get unwound, so there is no tomorrow. uh, 25 days later, all that is also forgotten. So it is very clear that very short term moves based on very short term current events will impact the markets. But if the medium to long term trend on the markets is sound, they will get absorbed and the market moves on. That's what we are seeing time and again. Nothing much to talk about today really, because there has been no major movement. Nifty Junior also higher than previous day at 0.3%, but not really. I mean, didn't go anywhere, just about hanging there at the top. So now there is a potential of a double top also. So if Nifty starts to come down from here, it technically becomes a double top, and this low then becomes the most important point, because if we start to come down here and this low gets broken, then a lot of algorithms and a lot of trend followers, pivot followers, many types of strategies will give a sell if we go below 23,800 odd now. So, but if we are to sort of go beyond this 25,000 about range, then it's a breakout, and there is no longer a specter of a double top right there. So that was the Nifty. Nifty Junior is also in the same position. Nifty mid caps again very near previous top, actually closed slightly negative 0.14%. So just like I was mentioning the other day, Sachin and Sunil, they start to become very defensive near important points, and that's what's happening in mid caps also. Small caps had broken out 2 days back. There was a nice pop in the morning also at 18,316, but it couldn't sustain, and it dropped back to 18,180. So small caps are still sort of leading the other indices in the sense that they are not making a double top, but have gone up further beyond minus 0.22%. Bank Nifty is the weaker cousin. It remains below this 40-day moving average and is struggling actually to go anywhere near the highs. We are just about hanging where we were on 1st of June, and the whole narrative about banks margins getting squeezed, banks not able to raise deposits, uh, RBI governor and FM both talking about how people have moved their FDs into stock markets. I mean, all this is having some sort of a uh, uh, overhang on banking stocks, and this is when we are at the cusp of an interest rate cut. An interest rate cut is extremely beneficial for the bank, for the paper that they're holding, for the bonds that they're holding, but there seems to be no enthusiasm about that part of the narrative. Anyhow, bank nifty remains weak at minus 0.26%. uh, Advanced decline again in favor of declines today. So 300 declines to 199 advances. So 2 is to 3 advanced decline ratio. So a bit on the weaker side versus the previous two sessions where we had slightly more advanced decline ratios. Some folks have continuously told us that we need to also see FII trend. So we've added back the FII trends in a different format. Here you can see that in the last four sessions, not including 28th of August, which was today, FIIs have bought stocks and DIIs have also bought stocks except on 27th of August. So there seems to be some sort of a change since 21st of August, possibly after it has become clear that interest rates are getting cut. That causes significant amount of change in terms of how global funds are going to be looking now at emerging markets. As US interest rates come down, funds will have to sort of move to higher risk assets to sort of compensate for that dynamic, and that's probably the reason why we've seen some FII flow go up. But let's see how long this sustains, because FIIs have for long now been on the sell side, and if FIIs continue to now remain on the buy side, I think that's a very good support that the market would have, and it will allow DIIs to book some profits, allow local investors also to book some profit. But let's see where this goes from here. Today's heat map, largely IT stocks doing quite well, Infosys and Wipro especially. You also had Bharti Airtel do to plus 2% and LTIM do 6.5%. So IT stocks ruled the sort of sectors, and we'll see that. And other than that, there were not major losses, but Maruti, ITC, Nestle, Titan, Adani stocks, State Bank of India, these were the ones which lost some ground. Uh, Nifty Next 50 was sort of more somber. Adani stocks down, DLF down, PNB down, Siemens down, HAL, VBL, Zomato. Zomato is coming up with very unique sort of use cases. First, they launched this book tickets for shows kind of situation, and now they've launched you can resell your ticket on the platform in case your program changes. So this is very innovative kind of uh, thinking there. But anyhow, I mean, we have been long Zomato in many of the strategies since I think 70-80 rupees. So we are happy that this company is doing well. Kolpal, DMart, Trent, look at Trent, 5.4% up again. Naukri 1.7%, Zydus 2.2%, Torrent Pharma 1.7%. Some of these mid caps kind of companies really doing well, although they are now large caps. Uh, and it's really, there was no real fall in any of these stocks. It is just lethargic, slightly gradual down move, because there's less enthusiasm here. As you can see, as I was mentioning, IT stocks leading the rally, 1.6% up today. Pharma giving good support. So more defensive play, IT, pharma, consumption at the top, and you had some losses in PSU banks, FMCG, energy, and public sector enterprise stocks. FMCG is a surprise that it is not there up in the defensive stocks, but FMCG over 3 months has done quite well at 13.5%. So can't really complain there. Real estate and PSU banks have done the worst in terms of the last 1 month. IT stocks zooming up, having crossed some good benchmarks on the way. IT is at an all-time high. LTI Mindtree, L&T Tech, Wipro, Coforge, Infosys, Emphasis, Persistent, all doing quite well. And this on a day when overnight the Nvidia results are to be out and they are likely to impact the markets this way or that way in a big way. So I think quite a bold move by IT stocks, and maybe the trade that is happening is that Nvidia is likely to outperform the expectations, and tomorrow we may see gap up in a lot of things. So this is quite a remarkable move in IT, especially given the fact that just few months back, IT was in pretty much a doldrum territory, and now it has taken the all-time high out and is moving forward quite rapidly. Stock spotlight is on NBCC. NBCC was up 10% today, so a lot of gains have been made on this stock. I remember the stock was reeling at 20-30 rupees not so far back, and you know nobody was giving it that kind of a outlook, given the fact that it is a public sector enterprise company, and it was somewhere near, 10 rupees for significant part in 2013-14. Then it went to nearly 100 rupees in 2018, and then it crashed back to 14 or 15 rupees here, and then from 15 rupees it has gone to 195 right here, breaking out just few months ago. So this is a logarithmic chart, and hence it is looking a bit different, but for very long term charts, it is best to watch this the moves on a logarithmic charts. So now let's come to the main discussion of the day. क्या म्यूचुअल फंड सही हैं? I would say it depends on who you are, what is your intention, what are you looking for from uh, the funds. If you are a person who has no time for the markets, who has no interest to look at your own portfolio or to track it anywhere closely, possibly sahi hai. The advantages of mutual funds are definitely, that you can give your money to somebody and they will manage it for you, and there are some tax advantages also, and you can buy it in bite size, very small bite sizes. Those are some of the very big advantages of mutual funds. I was sitting with some friend yesterday, and he's a big mutual fund investor. um, so I asked him, who's your fund manager? He has three mutual funds. He could not name even a single one. So first question to you is, do you know who is managing your money? Yes, you may know that, this is this big company called XYZ, who has 500 funds under them. But who is the manager who is managing your funds? Do you know about him? Do you know what is his style of investing? Do you know what is his past track record? Do you know what is his, outlook towards the markets? If you do, very good. Then, you've done your some homework. If you don't, then it's like, you are assured that that person will do well for you, and that is also, a sort of a good thing to have, that you have complete comfort in whoever is managing your money. It's almost like, you go sit in a plane, the pilot is, you're saying, okay, पहुंचा ही देगा. So that is the kind of approach most people have, but the accidents happen. So 63% of equity mutual funds in the last 3 years have failed to beat the benchmarks. I'm not saying this. This is from ET Online. So 6 out of 10, you can say, mutual funds have underperformed the benchmark in 3 years, which is not less by any standards. Not less by any standard, because you are paying 0.5%, 1%, 0.8%, or whatever is that expense ratio, which is invisible to you. When a PMS manager or a investment advisor or a research analyst asks for subscription money or for fee, it is separate from your funds, and hence it looks coercive. But when a mutual fund, subtracts it from your NAV, it doesn't pinch you, because it just gets deducted and you don't even come to know. So anyhow, 63% mutual funds have failed to beat the benchmarks. 213 is the total equity mutual funds studied in this uh, report. 135 did not make it to the benchmark. 63% is the number of mutual funds that did not perform above the benchmark. Of course, they were performing. If benchmark was at 13% and your mutual fund was at 12%, I mean, they have performed, they have beaten inflation. I mean, there's no doubt about that, but they didn't cross the benchmark, and everybody cannot cross the benchmark That is also obvious. Now, within the equity mutual funds, what was the sort of breakup? So, mid cap funds, where 25 schemes were studied, 20 schemes underperformed, which is like crazy. I mean, 80% of mid cap funds did not beat the mid cap index. So, from that point of view, mutual funds sahi hai? I don't know. Small cap funds, 23 schemes, 17 did not perform above benchmark, 74% of them underperformed. So, what happens usually is that, if there are 250 schemes and 35% of those schemes have done well, so about 60-70 schemes have really done well, rest are all underperforming. So, you will only hear about those 60-70 schemes. That those are the ones which will get recommended by everybody, and that you will find out 3 years later whether that recommendation was good or not. Recently, uh, I think Radhika ji from Edelweiss was also mentioning that don't look at short-term performances. So that's why we thought we'll go with the 3-year part. Uh, Flexi cap funds, 69% of the funds have underperformed. Large and mid cap funds, 69%. Focused funds, 67% have underperformed. Large cap funds, 64%. ELSS funds, 56%. Multi cap funds, 56%. Value funds, very few, 16. 3 have underperformed. 19 have under. I don't know what benchmark they have chosen for value funds, but that's the least amount of underperformance there. Maybe the benchmark itself is not performing. So the I mean, if this number was not 67%, if it was 20-25%, I would be still happy. But 63% is a bit too high for me. I mean, at least for my understanding. So imagine there are 10 crore investors in the market. Even if I assume that they are equally distributed across all schemes, 6.3 crore people have failed to beat the benchmark. If I just were to oversimplify this calculation. So I mean, 6.3 crore people could have done better. I mean, that of course is always possible. And I'm not saying these schemes are bad, which have underperformed. For this period in 3 years, they have not been able to perform. Yes, over 5 year, over 10 year, maybe they will perform. So it's not that everything is lost or anything like that. I mean, most of them would have beaten the inflation by a very good margin. So from that perspective, this is fine. But anybody who's slightly more clued into the market, who wants to get some hands dirty, who wants to know what is happening in my portfolio, who wants to be a part of the transaction every week, every month, so on and so forth, and who think that they will be able to beat the average performance that is happening, in this. I mean, mutual funds, I call it lazy money investing, in the sense that किसी को दे दिया वो कर रहा है, कौन कर रहा है वो भी नहीं पता है, but you are happy, you are thinking positively about it कि हाँ 5-10 साल में कुछ मेरे को मिल जाएगा उसमें से. But here is the other set of investors who are very clued into their investing. They are watching it, they're managing it. In case they feel like that we have to get out of the market today, they should be able to get out. In mutual funds, you will get the NAV of next day, or some glitches. If they happen, then you will get the next to next day. All those issues are also there, but again, I mean, for most people that is fine. uh, so this large chunk of people not able to beat the benchmark is something that I personally don't like. I mean, they could have gotten into a nifty fund and at least beaten the benchmark. So the question to ask is that, very recently, I will not name, one mutual fund said that market is too overrated, we will not take any more money. Then market kept going up, 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 up. After 20%, 30% market gained, then they said, okay, we will open up, we will take money now. What kind of logic is this? So from that perspective, I mean, is it a AUM building game that you just keep building AUM? You'll make 0.5% of it. So if you have 25 lakh crores, you can calculate 0.5% of that, or 50 lakh crores, whatever is that number today. I don't know. So unfortunately, many managers are not even looking at closing their schemes if there is not opportunity available. If you are saying you are a value manager and there is no value that you are seeing in the market, why is your scheme open? Why don't you just close this scheme for now and open it when you see value? Because you are not allowed to anyways hold cash by beyond certain margin. So money is continuously coming in. So what is that number? 21, 22,000 crore SIP is coming in every month. Some number like that is there. Assuming same number of trading days, so 1,000 crore is coming in every day. Now 1,000 crore is coming every day. So these fund managers have to deploy 1,000 crores. They can't hold it because they're already up to their gills in terms of holding cash. So it is like a self-fulfilling cycle that is going on, that money comes in, it gets deployed, stocks go up, more money comes in, stocks. So uh, you need to see how this is working, whether it is suitable for your kind of psychology, your kind of outlook towards the market. What is the returns expectation? How is your manager doing? Who is your manager? What has been, his biases towards certain sectors? Does he have a phobia towards public sector enterprise stocks or public sector banking stocks, or does he want to do only small caps? Things of that kind. So have more knowledge, do your homework. Uh, if you want to get your hands dirty, go ahead and go beyond mutual funds. But if you want to just sort of invest and sleep, then probably mutual fund sahi hai. So this is all I really have to say. I mean, in terms of exit, I mean, most mutual funds are less active, of course. They are, so this is passive, the ETFs on index, let's say, and this is active, very active, maybe some small cases, something. And then there is a whole spectrum between that, where some managers are slightly passive, some managers are slightly more active. So you need to proactively see where, how you need to place yourself, how to exit, stuff like that. Um, can you talk to your manager? Can you send your concern to him? Can you send your suggestion? Can you even know what is you are getting invested into? No. So that is one huge sort of black, uh, sort of Chinese wall between you and the manager, which other formats uh, don't have that kind of a thing. So this is sort of my take on that particular segment of investing. All good, no problem there. But my experience is that the more the people have tried, the formats like small case or other formats, they have realized what is has been missing for them, both in terms of reach to the manager, understanding what is happening in the strategy, exactly what is happening in each portfolio, what allocation to each stock and everything like that. And then, of course, the ability to just on a click of a button exit when I want. That's my experience. Share me your experience in the comments. I would love to read them. I'm sure a lot of folks will send a lot of comments on this. Thanks. Bye.